Okay, it's been a while since I last made a video. I've actually changed some things on my end and have reduced the number of pairs that I'm looking at. So that is in part why I didn't make one, and another is not having the right environments to focus. So I'm only going to cover US dollar pairs as those are the ones that I'm dealing with only now. I just want to mention that on Aussie New Zealand, this is one of those pairs that just pass by, and that's simply the way it goes. The overall bullish idea did work, however, from the wrong spot. I did not think we would see a break of this following that massive weekly reversal. It has happened, and that's simply how it goes. It just passes on by. I did bring up this situation at one point, maybe about 2 months ago, that we could see some variant here with a three-wave advance, followed by a correction, followed by something more complex like a five-wave C-wave type of move. But in any case, that was just one of several variants, and the preferred view is obviously not going to materialize now. So it's simply one of those that passes by. Now, if there is a correction, well, we have to see what happens. There is still a number of variants here, but if there is a correction and turns into a bullish flag, there will be another buying opportunity. Simply that the market was too difficult in here to initiate a new position at this point. Well, good job if you did it, but for me, it was not even something to consider given the weekly look of it and the way it kind of edged up like this. Now. So in any case, that one's gone. Now I'm only going to look at US dollar pairs, starting with US dollar yen. The overall idea on this, in that the monthly is making trying to form a base here. That has not changed. I feel we are still in that position, given the sideways stochastics like the other pairs I used to talk about, in that this is still looking for, it's trying to form a base for another advance. A move towards 124 is what I think will materialize. So it probably has a couple months more of sideways moves, I would suspect at this stage. See, on the daily, the low here was not broken. So I would suspect that this has something more like a bit more like this. That may be too obvious. You know, a lot of the obvious moves don't happen in the market. The kind of textbook moves usually don't happen. So perhaps it'll change into something else. I feel at this stage, well, I think, sorry, what I'm trying to say is that it seems it's not yet ready to go. What I would say, I don't have a trade opportunity right now. I think the local trade opportunity is to the upside here. The only reason why I'm hesitant on the upside is because I'm thinking a little bit larger for a continued move for another month or two or so to form this base more. But I feel that this part of the down move is over. So there may be more of a bigger move up. Now, if that just turns into a corrective move, and then heads down a bit, or if it is actually forming a low here, I don't know. But I feel that just in the local sense, the upside probably has the edge here. So if there's any reason to look for a trade here, it would be to the upside. It's just my overall idea is that we may see a bit more of sideways action for a couple months, but I would give the edge to the upside, and overall the idea is that the upside has the advantage here going forward. Okay, the pair I've been dealing with pretty much exclusively on Twitter is cable. This has gone quite well as there have been a number of trades in this to the upside for this small correction on the 4 hour, 1 hour. There was a good flag here, a break, another buy opportunity. There were 5-wave moves. On the 1 hour, this is a 5-wave move. 3-wave correction. We had this on Thursday as a 5-wave move, 3-wave correction into Friday, another thrust up. Now looking at it, zooming out on that, the overall idea on the 4-hour is that from 3 August, we've had a 5-wave decline. So the setup here is to sell a correction, and I've been talking about the bullish case on this correction, which has worked out, but overall I'm viewing it just as a corrective move. Now if it keeps edging up higher, I mean, I don't know how high it's going to go. But at this stage, it's looking corrective overall. I have to go with the 5-wave decline, which is the key here. And that is what I'm going to work. So on the larger time frame, it's looking like the idea is that this is 4 or leading 1 on the daily. So given that this is 5 waves down here, I can view it as wave 1 or wave A. We have a 3-wave correction for 2 or B, and then we may see something. I mean, the decline is the preferred view. I'm not looking for a new high at this stage. The question is whether the decline will be wave 1 of wave 3. So we would turn into wave 1, wave 2, wave 3. Or if we're just looking at a larger 3-wave correction and the US dollar actually makes something more bearish than it even has been and looks at this stage, and then we see a big reversal like that. That would be the very, very bearish dollar view. But in any case, it's not clear how the next down move can be labeled at this stage, either as C or 3, one of 3. But the downside is the view to take here, from what I see. I have to take this as a 5-wave advance. 5-wave decline, rather, here. So this week I will be looking for downside views. Euro US dollar. Well, the look of it on the weekly is that it's probably just ended wave 3. Because, I mean, this segment here, or this one if you want to view it like this looks like one single sweep. However, on the daily, I do have an option to count it as 5 waves done into 29 August. This count is a bit ugly, but it's valid. And I want to run it at this stage because, well, what happened? There will be an ECB press conference on Wednesday this week, I think it's Wednesday, and then another in October and in December. So the anticipation is that there will be some type of tapering announcement or a reduction or planned reduction or some type of change coming into the coming from the ECB at one of these 3 press conferences. The view is at this stage, either we can look at it as 5 waves done into here, into 29 August, or perhaps we're looking, this count would have to shift a little and we could be looking at wave 4 overall. It would still suggest we're going to see a 3-wave decline. And if you look at the lower time frames, it's pretty easy to suggest that from 29 August we have a 5-wave decline. We've already had a 3-wave correction here. If it morphs into something else, a bigger 3-wave correction is possible too, but overall, if you get just a 3-wave move into trend support or a bit lower into the 117 region, it can set up another advance, another move up above 12050. And that would suggest that we were just dealing with wave 4. So in the short term, the downside is what I'm looking at in this pair. The question is how it will react once it enters 117, presuming it gets there. But judging with the 5-wave decline, the bears are in control of this in a local sense. The question is how the count appears in a larger sense, because I have it running as as labeled basically. 1, 2, 1, 2, 3, 4, 5, 4, 5. But it could also be something more perhaps like 1, 2, 1, 2, 3, 4, 5 for wave 3, wave 4, and wave 5. And then we see the bigger correction, for example. This in Aussie US dollar is looking corrective at this stage, so I'm open to seeing another down move. Now the COT position, the traders committed more long, there are more long traders, more long contracts this past week than before. It's actually gone up. I think this is one of the few pairs to, one of the few currencies to increase over the past week. I don't like the look so much to the downside on the weekly, but I do like it on the daily. I feel that on the monthly we have a small hanging man here, so I would look at this stage, and given the choppiness of this move, I'll be looking to the downside here so long as this recent high of 0.80x holds. So the idea is to the downside at this stage. That's the essential look of it, something like a flag, and see if the downside can materialize here. Now, or rather kick in here. Now this was a 3-wave decline on Thursday. Actually, no, it wasn't Thursday, a few days before that. So given it's a 3-wave decline, I don't think that's enough to set it up yet for the down move. This is a 3-wave advance too. So it's possible we may see one more gyration here, and on a new high, I would look for it to turn over. So overall, I'm preferring to see a bit of a down move here. I mean, the idea is that if this thrust from a triangle for wave B, as we went over, the 5-wave advance here is technically enough to put in a high in this and to see this really roll over back towards 0.75 or so. But in any case, if it is bearish from here, on a new high probably, I'd be looking for this to come down to at least a new low, probably. New Zealand US dollar, I don't have a view on this except that it's bearish. The extreme COT commitment from a month or two ago kicked in heavily on this 3-wave advance, and this is seriously turned over. I don't have anything further to say about this pair, so I'm just going to pass it by. It could be in wave 3 of 3 now if it keeps declining. I don't see any reason to be bullish on the New Zealand US dollar at all. Okay, and the other pairs, now tying my view of US dollar yen into the metals market, given the correlation, it's a hard one to suss out, but overall the bullish view in the metals has been working, and I would continue to focus on this. We have a breakout on gold, and I would look for this to continue. There's no reason to not be bullish this as far as I see. The correlation to yen is valid and long-lasting and meaningful. However, the yen idea has not kicked in with yen weakness yet. That has not started yet. And so I would stick with what's working, which is a metals trade to the upside. And especially with silver. Silver in particular I mean, the percentage moves are usually bigger in silver anyway, but given the gold-silver ratio, at its current level, I would expect that for silver to outperform gold to the upside. And it's looking good on the monthly. This is the type of situation that if it does kick in, we could see a very, very strong month up above 1850 at this stage. But for now, it's working out. On silver, we also have the start of a breakout here. And gold is similar to that. The count on gold is much harder, for me anyway. I mean, this was okay and this was fine, but I found it very confusing up at this stage, and it's looking kind of choppy and corrective in this way here. But the upside holds, so keep trading it to the upside is my view. Same with silver, and I think silver has more of a bullish edge here. I was trying to work a leading diagonal. It could possibly be more like that. But in any case, I think silver is sticking to the upside and no reason to not be bullish. There's full reason to be bullish on this. And so far the idea of this from, when was it, the beginning of August, when it was about 1670, 1680, has worked for about 90 cents to the upside. So that's been fine. So no change there. And overall with the dollar, not much really to say at this stage. If we do see a new low, there's a lot of divergence to be worked here. It could be kicking in already because we have the daily hammer here. But the view overall, I mean, for me, there is enough on this count to be 5 waves down into 92 on the DX. But as I mentioned, like Euro US dollar could morph and we could have one more gyration to the downside. But I think essentially it's just about there for a larger correction. So this week I'm going to be sticking to the pair that's been working for me, which is cable. Last week the upside worked on this move, and this week I'm going to look for that to exhaust and for a larger downside move to work to kick in beneath 127x. All right, bye.